Hi, everybody. This is David Skrika. This is stock chart of the day from Profit from Pessimism. So I'll change this at some point. I think at some point I'm just going to change it to my name because I use this for Profit of Pessimism, stock chart of the day. There's another my other service, Dollar Hedge Insider. So I use this for so many things. I probably should just use my name. But anyhow, today we're going to look at strategy and look at this being like a leverage play on crypto. And is it a sign that maybe the crypto market is kind of in that blow off kind of phase, kind of like it has? Now, again, I know a lot of crypto bulls will start attacking me, but I'm just talking like, in 2017, 2021, crypto kind of blew off when the market topped, had big time, almost 80% declines, and then was able to go to new highs anyhow. So that's just the nature of the crypto market. I'm not someone who's an anti-coiner at all. I think, but I've said over and over again, I do believe that crypto is a risk on market. So we can see here that, Bitcoin's around 96,000. It went to about 100 and then kind of has stalled out there. Ethereum is 3,700. So MicroStrategy, for those who don't know, this was like one of the darlings during the dot-com bubble. It's a tech stocks, one of the first stocks that kind of pumped and dumped. They even had, excuse me, some accounting issues back then, and then what we can see here is, I did nothing for years after that. Then had this first little mini pump here in 2021 when they started to buy Bitcoin, and now they like their models essentially they borrow money and buy Bitcoin. So what happens is that makes you more leveraged, right? Because when they borrow that money, they obviously have to pay back the bond as well, right? But here's the way it kind of works, right? Okay, let's say in the case of MicroStrategy, they just did a bond for $2.6 billion. So let's say they take $2.6 billion and they buy $2.6 billion worth of Bitcoin. They even buy more because they actually will go on margin, which makes it even more leverage. But let's just say to make this easy for this argument, they buy $2.6 billion of Bitcoin at at let's say they did it in November. So let's say they did it at 80,000. Okay. So you buy it at 80,000. Let's say Bitcoin, for argument's sake, goes to 200,000. It's 2.5 times your money. Well, if they just pay back that $2.6 billion loan with the profit, right? Like that 2.6 billion gone up 150%. So that's roughly, you do the math, say $7 billion, right? $6.5 billion. That, you know, 2.6 is paid back, let's say, from 6.5 billion, just so we can get the profit. So 2.5, 2.6 goes to 6.5. So you've made about $4 billion. You pay back the 2.6, boom, you have $1 billion in profit, like that, from nothing, basically, right? So it's just like, when you do margin on stock, if you put 50% margin down, say at a stock at $10, and it goes to 20, well, you've actually turned, because you only got putting down five of that 10, your five, after you pay back that $5, has actually tripled instead of doubled. So it gives you more leverage, but of course it gives you more leverage to the downside, because all of a sudden, if say Bitcoin, say they bought it 80,000, goes to 40,000, well, boom, all of a sudden their 2.6 billion is worth 1.3 billion, and they got to find a way to pay off the rest of that 2.6 in debt. And of course, if they use margin, that 2.6 billion can essentially become zero, because on top of that debt, they have to use margin. So it becomes very, very leveraged play on it. And we saw something interesting happen. So you can see after this huge boom and bust, it finally took out the high here. And you can see, I call this kind of almost like the ultimate boom and bust stock, because you can see these huge runs it's had in the last 25 years, and especially since Saylor did this. It's essentially a Bitcoin. It's almost like an ETF. It's like a leveraged ETF. That's essentially what this has become. So you can see here, this was a huge reversal day. Technically, you can see the huge volume as well. There spiked to almost 540 a share. Closed the day at 400. Now it's at 373. And that's another thing too, because it isn't an ETF. It's not just going to track the ETF holdings. It's almost like a closed-end fund in that it will trade at big premiums and discounts to like to Bitcoin. You can see as recently as just this past February, it was $50 a share. It went up 10x. Well, Bitcoin, we'll get the Bitcoin chart just to show you. Bitcoin did well, has gone up more than double. Yeah, but this thing went 10x when Bitcoin went up 2.5. Again, proving my point of it being kind of more leverage play. But this is kind of a dangerous game they're playing, especially when they're using debt. Like they did a $500 million bond that was paid off early. I think it was due actually in 2028, and they paid it off early, with the gains from their Bitcoin, and then they turned around. Now, the current bond they have now, the good thing about it is that it's convertible into stock, and it has no interest. So it's almost like a private placement, right? So well, the good thing about that is people obviously buying that debt are just hoping that this stock can go up enough, and then they can kind of almost like exercise their convertible, their warrant, if you want to call it, and make money on the stock. So this kind of anyhow, if you go look at the press release on it, you can see right here there's 0%. They raised 2.6 billion, as you can see, and Class A common shares with at least 130% of the conversion price, blah, 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 just talks about it. But basically, it's convertible. You can see the conversion rate is they can get 1.48 shares of MicroStrategy per $1,000, blah, 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 at $672 a share. Well, of course, it's nowhere near that. So this is basically a play too. Like Bitcoin hit 100,000 there, right? You're gonna like to make money off $672, they're going to need Bitcoin to go to like 120, 140, maybe 150,000. So this is basically, again, a leverage play on that. But what happens again if Bitcoin tanks like it did in 2021? Then it's going to be very difficult to pay off because it's still a loan, right? Okay, I know there's no interest on it, but it's still a loan, right? So that basically means they won't be able to pay off that 2.6 billion. So anyhow, so MicroStrategy, my opinion, is kind of like the ultimate boom bust stock. If you're someone who really believes in Bitcoin, like to be blunt, if I was someone who really believed in Bitcoin, let's get a shorter term chart so we can kind of see the last two Bitcoin booms and busts in the stock, and I'll put it on a log scale. And you can see here, went to 125, then it went down to almost 10, right? So when Bitcoin went down about 75%, this went down almost over 90%, but then it went from 10 to 550. So it went up 55 times. So if you're someone who really believes in Bitcoin, I rather just play a smaller amount of money in this, or someone who's gutsy enough to short this, because this is a more leveraged type play. And I think if you're going to be in a risky asset class like this Bitcoin, you know, that's what you have to do. Obviously, right now, I don't know if I would have any position in the stock. Obviously, I don't. And it's because if we're in the final blow off for Bitcoin for this move, we're very late in the game. Like either, excuse me, it's going to be like 2017 and it's going to blow up in December, and we're right now in December, or it could be like 2021 where it kept going up a little higher. And you can see, we could still, you can see maybe a double in this. That may sound like a lot of money, but I don't think a double is worth basically losing 90% of your money, which could happen if Bitcoin was down 70 or 80%. So, and I remember last time they were very close to getting like margin calls on their Bitcoin, because there were margin calls because again, they're buying leveraged Bitcoin. So anyhow, I just want to show you, this is kind of the ultimate boom bust stock. They're buying Bitcoin, which is a risky asset with borrowed money. Like, of course, in a bull market, that's fantastic. In a bear market, not so much. So I hope you enjoyed this. The issue I'd see is at some point, if you get a prolonged decline, and look at any asset class is going to have a prolonged decline. Stocks didn't do anything from 1966 to 1982, from 2000 to 2011. So as much as an arrogant as I think a lot of the Bitcoin investors are, gold didn't do anything from 1982 to 2000. It actually went down. You're going to have at some point a 5-10 year period where Bitcoin does nothing. And a stock like this will basically just be screwed. That's another issue. So, but anyhow, I just thought I'd show you this kind of the ultimate boom bust stock.